Hi, everybody. This is Bitcoin Critical Pulse. Today is August 26, 2025. I am here with Chris, and we usually make a little introduction to explain what it's about. Basically, we are discussing Bitcoin price action, but not just Bitcoin, all the different universe around Bitcoin. Uh, Basically, strategy or IBIT with these tools that Chris and I develop based on using this principle from what is called critical science. It's kind of a branch of physics where basically you're looking at phenomena that change state. So you go from one situation to another, often very quickly. Usually, some catastrophic event happen, but not necessarily. But it's a kind of big change of state, and you want to understand what causes each state, what characterize, why it happened, if it can be predicted, what are the patterns that can be observed before and after this change. So this entire idea is what drives us, right? So we want to understand how this applies to the market. It applies because it's a new way of looking at market. Instead of thinking, oh, the market goes up or down, we are saying, okay, the market doesn't do much, and now the market is doing a lot, right? It's something happened where the market decided to do something, usually moving up or down, but that comes as a secondary consideration. It's much more interesting and important to realize that something changed, right? And can we try to predict or look ahead? Because there are very precise patterns. One, these situations were studied in particular by this physicist called Sornet in the field of geophysics. Then he started to apply it to the financial market. He developed a tool that is called log periodic power law. That is kind of one of our main tools that we're considering. And this is why the show is called Critical Pulse, because we're looking at these critical phenomena, and there are pulses because they happen pretty suddenly at particular time in the market. Anyway, so we do have a website. I show how to find this website. You can see the credits below, whatever you call them. It's so please visit the website, and you will find more explanations. Anyway, so before I give a word to Chris, usually we show disclaimer. Let me share it. So if Chris, you want to.
Yeah, thanks, Giovanni. So thank you all for tuning in. And the disclaimer is something that we have to do. This is not trading advice. It's not financial advice. You should do your own research. Trading involves risk. And now that you've all read the disclaimer, we can move on. So I'll share my screen.
Yeah, I will make a little introduction about the power law first, and then we can go with the more in-depth analysis of a recent action. Let me share my screen. Okay, so this is one of the main indicators. You can find them in my, if you join the Patreon, I will give you a link later. Also, by the way, we have this deal where if you visit the website, there are two things that you can do on the website. One is to subscribe for the newsletter. Apologies for the people that are already subscribed. We are almost finished with reviewing the first newsletter that will come up sometime early in September. So just wait a few more days and you will receive it. Please go on the website, put your email. It's a free newsletter that goes more in depth on this concept, introducing them. Sometimes we kind of summarize what we discuss also on the show. It's a very good tool to keep informed on this particular view of the market. The other thing, you can also subscribe to the indicators that Chris is using to analyze the market based on this approach. Right now, we have one main one, but there are 9 more that will come up soon. But if you want to start to use the first one, that is one of the most powerful, you can subscribe. We will show you at the end of the show how to do that. Anyway, so let's dive in. Let's talk about the power law. And basically, I'm repeating over and over the same message because things really have not changed. The main thing is, we are supposed to be in a bull market, and the bull market was supposed to start in November of the last year, and it did start. We started to have, basically looked exactly like all the previous bull market. I even anticipated the beginning of the bull market. I say that it was going to start in November. This was of the last year. We had a very, very big, strong, powerful move that is typical of the bull market. We went above the power law. These are all signs of the beginning of a bull market. And then something happened, basically, kind of when we reach about 110. And it's funny because actually, it was kind of during my birthday. We had a little correction, but it's okay, it can happen in the bull market. But then, around my birthday, that was a beginning of February, I started to receive all these messages from Chris. We are not bragging too much about that, but it was almost scary because he started to tell me, I see a huge big correction in the market coming ahead. And he started to give me all these levels that I thought were crazy. He was talking about the 80s. And, I thought, actually, to be honest, it was my birthday. I was a little bit distracted. I didn't see it. And then I went back to it and I started to see the correction, but I doubted Chris because he was talking about going all the way to the 80s. I thought, this doesn't happen during bull markets that we have this huge big correction. And we did. It was really amazing. At a certain point, I will make a post actually showing all his predictions of that time. They were really interesting because he predicted them ahead of time with a very uncanny level of precision. He actually started to give me all these levels that Bitcoin actually reached. And it's very, very interesting. And we did have, so this never happens. This never happened because once in all the previous bull run, once we cross the power law, sorry for this, guys. Once we cross the power law, we call this the turbulent flow region. We stay in that turbulent region for almost 1 year. And we never go down again for that entire year. In fact, actually for 2 years, because it takes about another year to go back to the region below the power law that we call the core power law. That is basically this green region, we call it the core power law. The red region is the turbulent flow. But we have a very strong anomaly in comparison with all the different bull runs. And really, this is all what we can do. We can only compare what is happening now with what happened in the past. And we can say, while the power law is being followed to a dot, in fact, if anything, the model of the power law is becoming stronger and stronger and stronger, because usually when we challenge the power law was during the bull market. Now, it was always a restore because we went up as much as we went down, and the things kind of cancel out. This time, we don't even do that. We simply follow the power law. And this is happening over and over again. Every time we feel, oh, this is it. We are leaving the power law. Maybe we are reaching closer and closer to the peak that we predicted in the past. Right? This peak is based on the observed deviation from the power law. It's not part of the power law theory. It's simply based on the observation that we added these deviations, and even this deviation follow a pattern. The pattern is that they became smaller and smaller with time. There is a decay, and you can calculate the decay and make a prediction of how big the peak should be. This is all based on if everything follow exactly what we had in the past, this is what we are expecting. And me and Chris were talking about this before. I like to do this calculation and say, okay, how long is left between here and the, where the peak is. Now, if we follow the previous pattern, we never had a peak beyond the end of the year. Now, does it mean that we cannot have a peak in February, March of next year? We could, but then will be another anomaly. And all the people that make predictions about that don't have anything to go by, because it will have been just a guess, right? Before, when we made this prediction, was not a guess. That was, look, there is a pattern. Let's see if this pattern holds. But based on this pattern, I can make this prediction. That is how you do science. If you just make up something, you're making up something, right? So we don't know. It could be, but then all the bets are off. But if we want to reach this peak, that is, if we follow exactly what happened in the previous bull runs, we have only 4 months left at most. And we can calculate, we can say, look, if we went there like kind of in a straight line, because in this type of chart, I repeat this so many times, where we take the log of a y-axis, any straight line will be an exponential. So let's say we go in a straight line. We don't go in a straight line, but that is an idealization. Let's say it's a kind of an average behavior. It looks almost like a straight line. If you look at what we did in some of the previous bull run, we kind of like did that, right? We almost like a straight line up. This is an exponential behavior. Sometimes it's even faster, like a super exponential. And how much do we have to do every single day to achieve that? We just calculated before the show started that it's about something close to 0.6% per day. That is a lot, because we are not in the early days of Bitcoin where that was very easy achievable for Bitcoin. We're talking about a very mature Bitcoin. Just to give you a reference, last bull market, over the entire period of 1 year, we were going up about 0.45. So we will have to outperform what we did the previous bull run. And remember, we are saying that, if anything, these bull runs becoming weaker and weaker as time passes by. And we will have to do it consistently for not just for a few days, for 4 months. Of course, some day can be better, some day worse, but in average, 0.6% a day. It's not impossible. It's not yet in the realm of impossibility. What could be in the realm impossibility? I will say 1%. Imagine if I told you, we need to do 1% a day, every single day for the next couple of months. At that point, I will say it's almost impossible to achieve. It's not impossible. It would be weird. We were following the power law. All of a sudden, we see this straight line. Bitcoin has done that before, but it's much more unlikely now that we have a very, very large market cap. Anyway, so this is kind of where we are right now. The power law is stronger than ever. We're not leaving the power law. I like the fact that, we actually, if we go below it, we want to go back above it. We seem to be in a very robust pattern where, yes, there are corrections, but then we bounce back. But so far, we don't see anything as robust and as strong. And if you hear anybody saying the contrary, because I saw some discussion from APSK 32 or some other people say, there is nothing wrong with the bull run. They are using some wrong analysis. We are doing the wrong analysis. completely evident to the naked eye, because you can do all the sophisticated analysis you like, but the naked eye is your sanity check. It looks different from every other bull market. It's completely obvious. It's completely obvious. Okay. Last bull market, we had two peaks. We were going very strongly up in a very decisive manner. Yes, there are correction, but the correction after we went in this red area, right? We went even higher, and then yes, there were correction. Then there was a major correction, but even that major correction brought us back just to kind of hot, not super hot, and then we still had a second peak that brought us even higher. We don't have anything like that going on this time. We started well, in November, but then since then it doesn't look like a bull run. And anybody that tells you the contrary is lying to you. Anyway, Chris, do you want to go with your analysis? Sorry if I took
Sure,
time.
no problem. Okay. So the last several times we've done this show, I've started with a monthly chart showing the log periodic parallel critical pulse and how it's looking on the monthly, together with another tool that we have, which is called the temporal phase model. And you can see here that back in May, we had a target of $124,211 for the monthly. And I've talked about this several times in relation to other tools, the core line, another tool that we use, and the power law on lower timeframes. But interestingly, this past week or so, that level was achieved. And we've known about this level since May. And also interesting is that when we go to the daily chart, you can see that on the 11th of August, we had a target, an attractor level generated of 124,435, which you can see was achieved on Thursday the 14th. So the market then entered this white state, which meant it had its run, it was exhausted and was trying to figure out what it was going to do next. And then the next classic development we had was a separation of the static and pulse lines, back in fairly early on in August. And for the first few days, this separation wasn't that obvious. The lines were very close together and running in parallel, and this distance between them is quite important. It really wasn't until we got to the 17th and 18th of August where this separation really accelerated, and the distance between the two lines became very pronounced. And that's usually a pretty classic sign that there's a new movement underway. And what we usually like to see is for the static line to confirm the action of the pulse. And in the past, I've referred to the pulse as being the scout and the static as being the general. And if the general agrees, it joins the battle. Otherwise, it calls the scout back. And that type of thing has occurred previously here. And, throughout the history of the price activity. And it's resolved in stair-step type action that you see as the market rallies, finds a level, rallies, finds a level, until there's exhaustion. So the question that we're facing now is, will this move continue? And will the static give us confirmation that the pulse is in fact correct in its assessment of what's going on right now? And there are a few clues that we can look at to figure out whether we think that's the case or not. One of them with these temporal phase model attractor levels is that you see a stacking of them. And initially there's a stacking of them through this period here from August 13 through August 20, so that week, of continued prices to the downside. Then we had a bit of a leveling off and a very strong rally, which was thanks to Chairman Powell. And we had some upside attractor levels being generated that was subsequently hit. One was not, but then replaced by more to the downside. And right now we've got nothing really valid, and we're just waiting to see what transpires with the price activity. But we can get clues as to what's likely to unfold by looking at the equivalent patterns that these power law lines are generating across different timeframes. And in the table that you see down the bottom, you have different timeframes. Here we've got the 1 minute, 15, 30, and then the 1, 2, 4, 8 hour and daily timeframes profiled. You can change any of those with the tool to suit your particular trading approach. But all it's doing is tracking the relationship for the time frame of the static and the pulse. So if the static is blue, it shows blue here, and if the pulse is blue, it shows blue here. And you can see that these are updating dynamically. And what this allows you to do is to focus on the time frame that you're trading, if it's the daily, and still see what's happening at the lower time frames, the sort of more micro level. And what tends to happen is these power law lines will move in and out of agreement across different time frames, and that will wash through this table. So right now you can see that up to the 2 hours, we've got basically bullish types of formations happening with these power law lines, but it hasn't extended enough yet into the daily patterns for that to generate a signal here. So we're waiting to see what happens, which way this battle will play out. And we're looking at clues from these lower time frames. And at the moment, I'm just going to lay in Giovanni's power law. And I'll turn these projections off for the moment. And you can see that the pattern going into this period where there's usually the sort of run up towards the end of the year that gives you your cycle high, the 4-year cycle high, just hasn't evolved in the same way. We've really hugged this power law line. At the moment, we're beneath it. And we've got this signal suggesting that we could very well go lower. But my temporal models, which are the ones that Giovanni was referring to before when I was mentioning, 80,000 a while back, are not generating signals that extreme at the moment. In fact, they're not really generating anything. So to me, that's suggesting that we don't have resolution. We still need to see some more price activity unfold to give us a clue as to which way the market's likely to resolve. And these very large movements that we had on Friday and Sunday night really just end up generating noise. So what happens if you think about transactions that occur in the marketplace, you have this very decentralized set of exchanges and places where people transact, methods that they use to transact, all of them interconnected in different ways. They're all independent. They're not coordinated like a lot of the more developed stock markets are, bond markets and so on. And they're all run largely by bots and algorithms, and they have different participants. In fact, a rapidly changing and evolving cast of participants this time round as opposed to last cycle. And when you get extreme price movements, that automatically sets off a whole series of transactions by these algorithms and bots, whether it be by liquidity providers reducing their exposure, or people who are trading options and have negative gamma or negative delta positions that need to be reset and traded, whether it's people with risk parameters that are being breached and need to be resolved, any number of things. The list just goes on and on and on. ETFs now doing a rebalance. What are they meant to do? It's a function of their subscription and redemptions that occur on a daily basis. So all of these dynamics flow into the structure and result in price movement in different forms. And depending on the speed at which the different algorithms transact, whether it's hundredths of a second or millionths of a second, has an impact on all of that as well. So when the extreme moves occur, the discontinuous price activity is generated by these feedback loops that manifest in price and forced behavior in the market. So you need that forced behavior to stop and for the market to calm down and a normal sort of price exchange occur. And then once that happens, you get a reassertion of direction. So it's this concept of the market is either trying to figure out what it's going to do, or it has commitment and it's going in a direction. And we've had a clear direction from mid-August to the downside, and a bit of bouncing around most recently that we're trying to figure out and see which way it goes. And from the daily analysis of the power law lines, we have clear direction from the pulse, and it's in the purple state, which means a lot of price agitation, period doubling, which is classic of a complex system adapting. And we're still waiting to see at the daily level this static give us a confirming signal. And if it doesn't, then we'd expect to see the pulse turn up, which would be encouraging for price to continue to move back up to the power law line and perhaps beyond. And that would undoubtedly encourage additional levels from the temporal phase models as well. But the thing that's also very interesting is that right now, and Giovanni and I were talking about this earlier, is that the critical time for a traditional power law calculation is suggesting that that window at which there's a bubble and a point at which price is likely to break with some aggression in one direction or another is almost upon us. And it's in this sort of early, from now through to sort of mid-September that's likely to occur. So perhaps some of the turbulence that we're experiencing is coming from that phenomena that we've observed and we know is incoming. We just don't know exactly. So we'll see. We'll have to see how that unfolds. So let's just turn this off for now. And you can see in these lower time frames that we've got more bullish conditions sort of coming through. So if we just zoom down to have a look and see how they look compared to the daily, and we'll get a sense of what's transpiring. So this is the 2-hour rendering, and you can see that we had this same peak and very clear downward moves and bearish signals in the 2-hour chart, and it's had this stair-step process down to this low here. This, of course, was Chairman Powell's the time when he made his announcements about interest rates and the market spiked, but then it came all the way back down. This is Sunday's movement, and you can see the relationship between these two lines, how they were wide and how they've narrowed. We've got back into this white state down here again, a stair step, and price repelling from this white state level. So at lower levels, we seem to be trying to find this bottoming action, even though we've had a few false starts with an external announcement affecting price. But then as that washes through the system, that reflexivity and feedback loop that I was talking about before as a function of the structure of how the market conducts itself is what we're witnessing in these price actions at the moment. So in the bigger picture, the daily, still waiting to get guidance from the static, but the pulse is telling us that it's down, but it's in the purple state. And as I tell folks that use this tool, the purple state has 4 states, both positive and two positive, 2 negative. And 2 of those states are highly schizophrenic. And you get, we've had a lot of that in these last few days. These moves have been extreme, and they've caused very significant agitation in price to wash through the system. But we like to see that slow down and we get some more order back into the market. And you can see here, as this table is evolving, that the lower time frames are generating more bullish perspectives than bearish perspectives, but that hasn't washed through to the higher time frame states in the 8 hours and the daily. So that's kind of where we are. If anyone has any questions, I'll address those.
Okay, yes, let's look at if we have any interesting questions. Yeah, okay.
Okay, so I'm gonna give you I'm sure Giovanni, you've got some opinions on this. I'm going to jump
Sure.
in and try and answer that contextually. So, and in light of the changes that have occurred this time around, as opposed to last time around 4 years ago. So the world now is very, very different from what it was 4 years ago, and the price level is very, very different. And if you think of the participants in the market, you've got, 5, 6, 7% of all Bitcoin currently residing in garbage heaps or broken computers that were mined very early on and have been lost to all time. You've got another big chunk of Bitcoin now residing in ETFs that didn't exist in the last cycle. You've got a very significant chunk residing in treasury companies that didn't exist, certainly not in this form last cycle go around. You've got liquidity providers, people who are making prices on various exchanges for people who want to participate in this market. You've got a whole array of people trading options. You've got some sovereign holders now of Bitcoin, countries that have decided that they want to own Bitcoin in their treasuries for whatever reasons. So the cast of players is very, very different, and they all have very different mandates that they operate under. Some of those are driven by algorithms and risk control limits. Others are totally different motivations. And a good analogy would be, and it's not really the case with Bitcoin, but if you just contextualize someone who in traditional stock space is managing a small cap portfolio, and they did the right thing and bought Nvidia at the right price, and it's sitting in their portfolio appreciating rapidly, but all of a sudden Nvidia takes off and it leaves the small cap index and goes into the large cap index. So the guy who's managing the small cap portfolio can't have Nvidia in his portfolio anymore because it's a large cap and not a small cap. And his rules say that he can't have large cap in his portfolio. So he has to sell. That's an uneconomic decision. It's not rational from any other point of view other than my rules that I operate my portfolio by require me to do that. So you have all of these strange things occurring in the market that didn't occur before. In the case of ETFs, they're going to be buying or selling based on the ebbs and flows of subscriptions that come into and out of their ETF. And they have to affect those transactions through the marketplace. You've got treasury companies that own Bitcoin and use their capital stack, equity and debt, to finance the acquisition of Bitcoin. And as long as the average price of Bitcoin is below the price of their stock, they can keep doing that. The more they move to fund those Bitcoin acquisitions away from equity into debt instruments, the more levered their portfolio becomes and the more exposed it is to fluctuations to the downside. So in the case of Strategy, which is far and away the largest treasury company of Bitcoin out there, and it holds, 600,000 or 700,000 Bitcoin, some incredible amount. Its average price keeps creeping up each time it buys Bitcoin at these elevated levels. So its average price, is probably, heading towards 80,000. I don't know. That's a guess on my part. I don't have any knowledge on that specifically, but they've been making acquisitions for a while, and a lot of those acquisitions have been made at higher prices. But there are also a large number of newer entrants into the marketplace as treasury companies, and they've been making acquisitions of Bitcoin at these higher levels. So their average price is going to be much higher than Strategy's. The reason I'm explaining all of this is because there's another dynamic that's going to affect the Bitcoin price, and that is an arbitrage, and I've spoken about this before, where if the stock of a Bitcoin treasury company has a MNAV, its value is significantly above its fair value versus the assets that it owns, and those assets are Bitcoin. If the MNAV is greater than 1, then they can continue to issue equity and buy more Bitcoin. That's what Strategy is doing. But if the price of Bitcoin declines to the point where it is under or close to the acquisition price, then that company potentially has some issues facing it, particularly if it's used debt to finance any of its Bitcoin acquisitions. And the reason that's a problem is because each of those debt instruments, be it a convertible or a bond, any interest-paying instrument that's been issued to fund its acquisition of Bitcoin, will have loan covenants, coverage ratios, things that the company has to comply with in order to remain in compliance with its borrowing. It may have to top up and provide more collateral. How does it do that? Can't buy any more Bitcoin at the moment because it's no one's going to give it more money to do that if the price is declining. So what's its only course of action? Either to issue more equity, which is dilutive to the current equity owners, which will drive the price down of the equity, or to sell the Bitcoin. So this creates reflexive sort of feedback loops that feed into the structure and cause people to execute transactions that, you know, otherwise you wouldn't be thinking about, and that in some cases don't make rational economic sense. But these are all dynamics that didn't exist before and that are applying pressure in different ways, both to the upside and to the downside on Bitcoin. And I think they're contributing in part to this different structure that we're seeing going into this part of the cycle. That's my 2 cents.
Chris, do you want to address this question?
Which one? How much?
What is the difference between static and pulse? It's on the screen.
Oh, okay. I see it. Right. So the static was the first iteration of the parallel line that I developed, and it's really more of an anchoring tool. It still, you know, performs the calculations, but it's slower in its calculus, and it gives us a point of reference. The pulse is much more adaptive and responds much more aggressively to the shifting price levels.
Okay, and what about this? You can read it. And
yeah, I'm reading it.
Yeah, read it loud if you don't mind. So
sure. So the question is, do you follow global liquidity as described by Michael Howe? Last few reports indicate a surge in GL, but at a slower pace, possibly leading to a downturn later in the year or beginning of 2026. I have not looked at that, so I'm not really qualified to answer the question.
Yeah, I actually interviewed Mike Howell one time. We had a show where he was a guest, and I'm pretty aligned with his analysis, and I admired him. I even read his books. Mm-hmm. So he's kind of a global expert in global liquidity. And yeah, so if you look up, maybe next time we are going to dive a little bit more on global liquidity. Bitcoin seems to follow with a given delay. I was skeptical about that when I actually verified that statistically it's true. It's not one-to-one. Mm-hmm. But yeah, so there are few indications that we will still see some kind of correction at the end of the year. There are many different things. You know, there are cycles like the PMI, for example, that tends to have a peak at particular time of year, you know, the end of the year, for example. If you calculate, you know, the log periodic power law, it seems to indicate that it's going to be some correction. We don't know if it is the cycle correction, it's just a temporary correction. Yeah, we have a few more months. We are not yet there, right? There is no indication that, oh, this is it. We reach the top. We are going to have some bear market. There is no indication of that at all, neither at the global macro level, let's say, and at the more detailed level. We will have to wait because differently from all the other cycle, this cycle is different. So, but yeah, it's possible that we still see some kind of a correction. Maybe we do see some kind of uptick of a price movement at the end of the year. You know, we will have to see. It's a situation where we are collecting data. We are trying to figure out what happened. We are trying to figure out if this is a a temporary change. It is what is going to happen in the future. Anyway, and then there is this question. Maybe this is an opportunity, Chris, to show the website and how to sign up for the indicators.
Sure. Let me change this. So this is the website. It's complexitytrading.ai. If you scroll down and come to this little icon here, or alternatively this one right here, and just click on it, you'll get a box that pops up. You can learn a bit more about the indicator by clicking here. It tells you what it is and isn't. And this is very different from other forms of technical analysis. It's got nothing to do with traditional Edwards and McGee or Bulkowski patterns or MACDs or RSI or any of those sorts of things. This is all rooted in science. And the subscription, if you click on this button, it'll take you there. It's $105, so it's transaction costs plus $100. You can sign up for a year, which is $1,000 for the year, which is a discount to the monthly price. But I think the folks that are using this have made back their subscriptions many times over. We have a Discord where once you subscribe, you can jump in. There's a very vibrant discussion that goes on there. A lot of back and forth between myself and the users themselves. And it's a very supportive community. So because this is a different language where we're talking about structure, where we're talking about the interaction of things where price is the footprint of the things that we're watching, it's just a different way of thinking about it. So people take the time to help each other understand what's going on with the different indicators that are generated by the critical pulse lines.
Very good. And you can also subscribe for the free newsletters where you can get updates.
Yeah. So if you just put your email in this little thing here, then you'll be receiving the newsletter when it comes out. Once the newsletter starts getting circulated, we'll have another area on the website where there'll be an archive. You can go back and access them, and there'll be other information that we start to populate the website with too. These 9 other tools are all complete. They're in the process of being rolled out. They should be out in the next week or two.
Okay, and let's answer this question, and then maybe we can wrap it up. What influences the critical time?
Right. Well, I guess we can both answer that. I'll just start off by saying that the critical critical time is one of the outputs that comes from the work that Sornet did, and what he's doing is looking. And as Giovanni has mentioned before, he's a geologist, I think, by background, and he's trying to sort of draw parallels between the buildup of tension in the tectonic plates that results in the shift that causes the earthquake. And the corollary in financial markets is you have this agitated state that occurs where there's the resolution occurs with a fracture, and it's either a bubble of one sort or another. And in financial markets, bubbles can occur to both the upside and the downside, and they occur across multiple time frames with different levels of magnitude. So critical time is when this agitation and these recursive occurrences just reach a point of unsustainability, and you can sort of project that into the future a little bit. Did I do a decent explanation, Giovanni?
Yeah, I think so. So basically, this is how it works, right? So what Sornet noticed is that there are all these different phenomena. This is one of the things that we like in physics, when we see the same type of pattern appearing in many different contexts, right? So you notice it with earthquake first, but then we apply these to cracks in material, because you can see the same thing, where you notice that basically the material before cracking starts to oscillate, right? There are vibrations that you can measure, and these vibrations became faster and faster and faster. And then he had this intuition that this may be how market work just before a crash. It can happen both before a crash, but also when you have some kind of up run in the market. So basically, these big phase changes, with these sudden changes that you see. And what you notice is that people act in a very coordinated fashion. It's something that happens. People think that we are all doing different things. We don't. We actually start to behave in a similar manner when we interact with each other. And so it's almost like a kind of herding behavior, right? So you start to see that the action in the market accelerates. It became faster and faster and faster. People buy and sell, buy and sell. There are corrections in the market. The market goes up and then goes down. And these happen faster and faster. You can extrapolate what will happen if this continues. Basically, the oscillations are so fast that are unsustainable, right? Mathematically, you can calculate them, but physically, the material will break or the market will crash. And you can say, okay, if it continues to move in this way, the oscillations are so fast that I can kind of predict when that is going to happen. And that is what the critical time is. It's not perfect. It's kind of a range of values, but it has the property of being predictable. You can do it many days ahead, and Sornet did it. Actually, made a lot of money by doing this. And so now, many times you can go backwards and say, could I have seen this coming? Because the calculations are relatively complicated if you do it in the full-fledged way. The advantage of what we are doing using these trading view indicators is that we are simplifying the calculation, because trading view has a lot of limitations in terms of computational power and so on. So Chris found ways of simplifying this calculation, of creating these polls that basically is kind of telling us, using similar ideas or workarounds, where supposedly the pulse is going to be, or where we are going in terms of these big changes in the market behavior. But yeah, this is what influences. And it doesn't have remember, these are the power law that I discuss. It's a different type of power law. It's probably related, and we need to study more how the two work together. Just by looking at the chart where it's superimposed, you can see that they work well together. But it would be nice to come up with a more detailed theory of how the global power law and the local power law work. So the global power law describes the behavior since the Genesis block. But this is the long-term trajectory, and then you see these local power law that talk about more the changes at different scales. Probably they're related because it's all a matter of scales, right? So the global trajectory probably is like saying Bitcoin is in a permanent critical state, right? Because you observe this power law is one of a signature that characterize the presence of these moments when you transition between one phase and another. So it's possible that Bitcoin lives in a permanent state of criticality in a sense. But then you can zoom in and you see this more local type of power law. And this is what the indicator that Chris developed are all about. Hopefully that explains it. Yeah, so we often try to make it concrete. So Campi is asking this question and give examples. We have done it in the past. If you want to go and look at some of our show, I think one of the best way of using the tool is doing different type of option strategies, maybe cover calls, for example. But we have a Discord group that you can join, and there are discussions there on how to apply them, on how to use them, and so on. But we will try to make it more concrete. We will give more example in the future. Remember, it's not trading advice. It's not financial advice. It's just educational ideas on how to use these tools.
So let me just add to that question from Campy, and also I wanted to thank Gonzalo. You've given me some reading material, so thank you. I'll be checking into that. But Campy, you're asking for hypothetical trades. So if we just look at the daily chart here, and in prior episodes, Giovanni and I have talked about the how to use this to for a couple of fairly simplistic option type transactions if you're looking to generate income from your Bitcoin holdings in different ways. And these are basically variations of covered calls, but that's a whole other discussion. But specifically, if you look at the daily chart, I'll point out a couple of things to you. Is the daily chart up, Giovanni?
Let me do that. Just give me a second. Here.
Thank you. So this is the daily chart, and here we had, this point right here where we had the peak, and you'll notice this white state occurred here, and then this pulse line went negative. It changed color from purple on the way up to straight into red and then orange, and then it remained very close. And I talked about this earlier in the show. This is a sell signal, but not a high quality one. The real signal occurs here at this level here. So prices, all the way down here at 117,500 thereabouts, and that is a signal by itself. If we go down to the lower time frame, let's just look at 15 minutes, for example, and we'll go back to Friday when Chairman Powell spoke. So that's right in here. And if we roll back, and just let this load, you can see that these lower, I need to reconfigure this to lower time frames, but just let me do that. Okay, so what we're looking at this table now is the lower time frames 1, 3, 5, 10, 15 minutes. And I'm just going to play this, and as you see it evolve, watch how these lower time frame states change. So you can see the 1 minute is positive here, the 3 minute is negative, 5 minute is a positive signal actually, but these higher ones are still bearish. And as this evolves, you'll see a couple of things happen, and I'll point out the trading signals that are generated by that. So there's your first big move, and you can see everything has gone very strongly bullish as a function of that. Well, that's no great insight, but let's see what continues to happen. And you would have noticed that these lower time frames in this area here also showed positive before everything else. So price is continuing up. It's continuing up even more. And you can see these evolving here. Still all positive. This is all positive stuff. Then we have this. This is the static. It hasn't done anything other than continue up. The pulse has turned white here. The static is continuing up. And it's gone flat as well at this point. Speed this up a little bit. Then it resolved to the upside, continued on. Now we've got double white states happening here. Price is repulsed from this level. But we still have a white state, so we're still seeking resolution. The static hasn't deviated from the pulse, or the pulse hasn't deviated from the static rather. So we're waiting to see that happen. Price is moving away again. And right there, this move right here is the first indication that this is going to break down. And if we continue to play this out, let's see how the signal evolves. So the pulse and static remaining close together, meaning that this is not a great signal at this point. And it's gone back into a white state and then back into the red. And as soon as we see a widening of the relationship between these two lines, with the direction being taken by the pulse, which is occurring right now, that's a strong sell signal. And for folks that are using this toolkit, I provide a white paper, which is basically a research paper that talks a little bit about the methodology and its evolution, in deference to Sornet and others that have done the groundbreaking work here, and also a map in the form of a spreadsheet that traces the major 20-odd relationships between the pulse, the static, and price, and how to translate these different signals that are generated by the pulse and the static. And just so that you're aware, there's literally hundreds of these types of relationships, because it's not just is the pulse sending a sell message with its color? Is the static agreeing? Are they both agreeing at the same point in time? What's the relationship of one to price, to them both to price? Is price above or below one or other or both? All of these various combinations, there's hundreds of them, and I've filtered them all to the top 20 or so that you really need to pay attention to. And all of that information is provided to folks who are using the tool. So this is one signal. And of course, when you've got both lines generating the same color, it's important. And just so you know, red is down, orange is down, but with less conviction than the red. And similarly on the way up, green is up, blue is up, but with less conviction than the green. And these lines move in and out of those different states. And there are other tools, for example, that allow you to monitor some of these things. So, for example, there are different signals that you can lay in on top here that tell you what's going on. And what I would say with this is that when a move is underway, you get reinforcement from these red and circles and triangles all the way down until there's some uncertainty, and you start to get the green signals appearing, and that tells you that things are changing. So look what's happening here. We've got some conflicting signals going on and then reverting, but usually in a move there's all of this confirmation to one side of the direction that the move's heading. So there's multiple signals, not just one or two. And of course, these can be used to trade different option strategies that can be used to generate income. There's a stack of different things you can do. But again, this is not trading advice. It's not financial advice. You really need to look at the tools and do your research and figure out how to
make it concrete by giving more examples. I'm very interested in using this tool for options, and I have already used them very successfully. So
Gio, you're on broadcast.
Sorry, you can hear me?
Yeah, I can hear you. I don't know if you were talking then.
Yeah, I was hearing. I was talking. Yeah.
So someone jumped. Go ahead.
Yeah. So I was saying we will give more examples of this. And I have used it for options myself. But it's a very good, important point. We're trying to introduce more examples in the future. Okay, guys, I think this was a very nice show. We covered a lot of material, and we will be here next time on Tuesday, same time. We change the day. It will be always on Tuesday at 2:30 Pacific time.